19th, and we're having some interesting market action. Quite thankful for that, actually. As you know, markets have been boring for such a long time. Currency markets in particular, I'm thinking. Not just for stock markets, but currency markets. But we're starting to see some interesting price action, in particular in the euro yen, pound yen, and Aussie dollar yen, which we talked about yesterday. If you're not already subscribing to our channel, ATFX UK, then you should, because over the last few days in our channel here, I've been discussing and sort of sharing how Aussie dollar yen can trade lower. I shared that yesterday, and sorry, 2 days ago, and then as well I shared about the pound yen, and even today we're very soon about to have potentially a breakdown in the Aussie dollar, which I shared already last week. So we have all these extra videos here, and we don't have a specific time for when they're published, but usually around lunch. And the best thing sort of to get notifications is to be a subscriber, and I can't show you here, but usually next to the subscriber button there's a little bell button, and if you click on that little bell button, you can choose if you're gonna want to get emails. Otherwise, what's gonna happen is you just get notifications up here. So that's something you definitely want to check it out. Okay, so let's begin, and I want to welcome everybody here. Let's see if we have no one in the chat box right now. So if you want to say good morning or hello, you're most welcome to do that. Just need to right here. Okay, so let's kick off. So guys, let's actually begin with what's going on then. So in the markets right now, the S&P 500, to give you an idea, is down with 70 basis points. So it's going lower. As you know, I've been bearish here over the last few days, and I said that as long as we're below this level, and we're probably going to trade to this high, which we did. And since then, the market has not really been able to sort of pull back. So it's just trading lower, which it's doing now. And I would not be short selling here. I think there's more clever ways of trading this. And one way of trading this, which is far more clever, is, for example, what we shared with you guys yesterday in the GBP yen. So in the GBP yen yesterday, we were trading in this descending triangle, and the market is sort of breached those levels yesterday. So we had that bearish breakdown yesterday, and now the market sort of just continues to trade lower. And I think this is where you want to be focusing on, maybe GBP yen, but also Aussie dollar yen, which I shared with you guys as well, which we're going to look at in a minute. So here, in my case, I'm targeting 139.87. And the way I operate is that I just shorted on the breakout. My stop loss was just above that high. But if you are like good scalpers, then this is probably something you want to be focusing on. So I wouldn't necessarily short here, but you know, any sort of pullback that does not take out yesterday's high will be deemed as corrective in nature. So I think we could potentially maybe go up, I don't know, worst case 142.89, 143. I do not think we're going to go much higher than that if we're going to continue here. But this is something, again, sort of, I will focus on that. Aussie dollar versus the Japanese yen, something as well that I have been mentioning. And that looks like this. It's a beautiful little sell-off. So here you're dealing with some sort of a rectangle. So you see the market was trading sideways, and the market did try to break to the upside, and that did not work out. So that was a false move. Instead, we had to break to the downside, and it's all because it doesn't look like we're going to have a trade deal between the US and China. The latest comments from China in particular, they don't really look that encouraging either. So I think the latest comment is that the Chinese government is ready to retaliate if tariffs are introduced on Friday. So that is something that is not good, and maybe they'll have some sort of turnaround. But I think the division is much deeper than this. There was a comment from a professor in China that's closely connected to the government, and he was saying that if the Chinese government would abandon supporting and subsidizing certain sectors, then that would sort of break the Chinese economy, and that would in essence be suicidal. That's what he said. So he doesn't see that happening. And in fact, he said that uh, he thinks that it's more likely that the Chinese government is happy to accept that increase in tariffs, so they can continue to subsidize companies. And subsidizing companies is something fully normal, something that Western economies as well did for many, many years. And then when the economy is sort of strong enough to stand on its own feet, that's when you would remove the subsidized. So it's a little bit like maintaining or like taking care of a child, right? When the child is very weak and very young, you need to sort of help them with everything. But then eventually, when they become teenagers and adults, they'll manage themselves. So this is very, very typical. Now again, one can argue that maybe the Chinese economy, being the world's biggest economy already in the world, on a PPP value estimate, uh, maybe doesn't need those help. And I guess that's what the US is arguing. We'll see what happens, but it's not looking that good. And from a purely technical perspective, uh, here you had a nice little bearish candle a few days ago, and I would have shorted here. Stop loss would have gone up here. This stop loss can now be reduced to yesterday's high. And here again, I will look for pullbacks if you're looking to scalp and you have some sort of scalping strategy, because I think here is where you're going to find the momentum and the action. I don't think you're going to find any action in the euro. And I think you guys know that as well. So let's not hope for too much. The market for the last few days has been stuck in a 60 pip range, but really yesterday's range was 26. And I think what's happening here is that the euro is acting like some sort of a safe haven. So times of turmoil, it can act a little bit maybe like the Japanese yen, which means that it's strengthened. And I think that the reason for that is that interest rates, as you know, are very low, if not negative, in Europe. So you can borrow money in Europe and take your euros, convert them into dollars, convert them into any other currency that has a higher interest rates, and invest them into different projects. US, I think, makes even more sense. So when we have these situations where people have sort of fear of what's going to happen in the future, stock markets decline, then instead of sort of trying to get that difference in interest rates that you can get if you borrow euros and invest in America, you bring that money home or you hedge it. And I think that's why the euro is getting a bit of support. And this is something we have seen in the past. I don't remember exactly when, but we have seen it in the past that the euro gains slightly in times of turmoil. And it's just because interest rates are so low. Looking now at the GBP versus the USD, it's pretty much where I would have guessed it would have get stuck. It still has that little bit of a bullish bias, but as I've been arguing over the last few days, this is very tricky trying to grab the right shoulder of a potentially head and shoulders, because you get yourself a left shoulder, right shoulder, and the head. It's very difficult to grab this, but but from a purely technical perspective, again, we have that little momentum there, and we slid a bit, and I think unfortunately we can continue to trade, but if this is gonna bounce, it should be bouncing now. It's at the 61.8% correction level. For now, I'll remain bullish above this level, but I'm not very enthusiastic, and I will be buying this. Here's the dollar versus the Japanese yen, and you're seeing that a bit of panicking in the market. The market is trading lower, trying to take out the low, and if we take out this level here, which is 109.71, we'll probably trade lower. This by itself is not necessarily a very good pattern. We're stuck within a range. We have as well what we call the failed head and shoulders pattern. If you see this like a left, right shoulder in the head, then when we trade below that right shoulder, you can sometimes get the difference between the head and the neckline as your potential profit. So on the break to 110.90, that would have triggered and sort of suggests we can trade lower. But again, this is not a simple pattern to trade. It's not a typical pattern to trade. There's not even a lot of people that even know about this. So again, my preference is Aussie dollar yen and euro yen. That's what I would be focusing on. If we look at gold, gold unfortunately spiked higher yesterday, but we didn't see any follow through. It's a bit annoying. I was short myself. I got stopped out. I really hate when the market sort of takes you out and then comes back. Not really hate, because that's a strong word, but it's no fun. Um, on the other hand, what's happening here is that this is happening because of risk off. So people are buying a bit of gold, hedge their risk. Everybody knows that. Uh, and I think when we look at this today, given sort of the turmoil we see, as well the inverse correlation between pound yen, dollar yen, euro yen, Aussie dollar yen, and gold, and the sort of inverse correlation sometimes with gold and stock markets, I mean, it wouldn't be unsurprising if the market is trading at 1,300 at one point. But I would not engage here. It's stuck in a range. People don't really seem exactly, they're not really fully aware, or they don't really know exactly what to do. Reminds me a lot about the dollar versus the euro. So let's hold off here. Technically, we're still dealing with this head and shoulders. We did not break the upside, but I'm guessing if we trade higher like that, we can go up, and if we take out the low like that, we could go down. So look for that break here in the market. You just need to wait for some sort of action. And again, I would not really engage. Here's the price of crude oil, and crude oil markets are bearish as well, but there's not too much momentum. We touched the sell zone 1, 2, 3 times, so I'm getting a little bit. I'm not giving up on this one, but I did lower the stop loss on this, or the trend defining level. Trend defining level is would be where I would put my stop loss. That's where I abandon my view on the market. And when the market doesn't go anywhere, there's nothing wrong with reducing stop loss orders, especially as we had to stop up here, then reducing it here. So we sort of reduce half of the risk. And because when something does not want to trade much lower, it will usually try to trade higher. So I continue to be bearish, but I acknowledge the fact that it does not necessarily want to trade lower. And also just looking at this, it looks like a funny looking head and shoulders with a left, right shoulder and a head, and potentially sort of a break to these levels, potentially triggering a little bit of a rally. Now, there are some times when you will see, there are some times when you're actually going to see stock market turmoil and turmoil in general cause commodity markets and crude oil to go higher. But I don't think that's going to happen today. I think at the end of the day, we'll continue to trade slightly lower to $60 a barrel, and then potentially down to something like 58.23. As for the S&P, again, to short sell this today, I don't think it makes a lot of sense. What's happening here, I think, is that you have people that were long getting panicking and getting stopped out. As well, what's happening, I think, here is that people are looking, you have these algos that look at what's happening with the yen pairs, and then sort of say, okay, S&P is a little bit too high compared to what's going on in the other markets. Let's sell a bit of S&P. Let's go long a little bit of dollar yen. So they try to work with these relationships or these correlations. So that is also probably something that is driving the market lower. But I would not short here. I think if you really want to short, you need that pullback. Alternatively, again, I would not engage and do this. But if you know what you're doing, then maybe around 28.75. Some people might short sell here with stops just above this level here. As for the German DAX, we're back where we started. So a few days ago, we said it's probably going to come down to these levels. But then what I also said is that because it looks like US stock markets are going to trade lower, it's unlikely that the German DAX is going to find some support here. So what I'm going to do now, I'm going to leave this. I'm going to get rid of all of this here. I'm going to leave it like this. And technically, the trend is still bullish above 11,847. But we just need to add things up, right? If the S&P, realistically sort of loses another 2.5 or 4%. So for the German DAX, 2.5% takes you down here. So below that level, and a 4.5 or 4 takes you down here at 11,600. So realistically, until you start to see that S&P 500 stabilizing, I don't think this is going to stabilize, and I think probably down here will be a better option. It just sort of depends what happens. If they go ahead with the tariffs and the tariffs are put in place, you just brace yourselves. we're probably going to see some bad economic data in the months following that. But if it's just sort of delayed implementation, or they implement it and then 4 weeks later they get a deal done and it's all good, then we can look to get involved and be buying in. But if they do implement, I think down here somewhere would make perfect sense, and then we just need to see what happens after that. Okay, let's see here. We got a few questions. Well, Ronnie, good morning to you, sir, and Marvin as well. Good morning to you. I hope you're doing well, and Nikos as well. So what about the euro yen? Let's take a look at the euro yen. If you guys have any questions, pop them in the chat box. So this is the euro yen, and the euro yen as well is bearish. I think I talked about it in yesterday's video as well. I'm not sure. I have called it an ascending triangle before, so let's do it again. You definitely have sort of the break to this level down here being some sort of ascend, being important. You got a low here, and then a few lows here, and a low here, and a low here. So you got 1, 2, 3, 4, about 4 touch points in the same area, and the difference here is 282 pip. So we had that break, and now this market is going lower. So all these markets are going lower, and let's just hope that this just continues to trade down for the sake of just trading in general, because every time markets are sideways like the euro is doing right now, again, it's very difficult to make any money. Okay, guys, do you have any more questions about the euro yen, by the way? So different ways of operating, right? Nowadays I just wait for the break on the daily. I just short sell and then I just keep it, so I don't have to bother to get a new entry every day. I don't really enjoy that. In the short term here though, like if you want to get involved, if you look into scalping and things like that, I think below 123.53, I think there's going to be a bearish market. We can just put some fibs on this. Your first fib kicks in at 122.88. The third fib kicks in at 123.13. So somewhere around here would make perfect sense. It's also the levels we saw this morning. If we sort of trade much higher from this morning, the candle is going to be a hammer, right? So the market should ideally not trade much higher than that. So maybe look for something like a level between the first and second fib, a level like 122.91, probably somewhere around here. I think traders probably want to be quite keen on selling, and then sort of as for the short term, we can just load the pivot point indicator. It's not going to help us too much actually, because it's already over. It already sort of beat those levels. Yeah, it's not going to help us. Yeah, let's just be realistic here. Let's do like this actually. We can load the ATR. ATR for the last few days has been 68 basis points. 68 basis points. So the market declined at one point with 77 basis points. So it wouldn't be unlikely if we correct, we revisit the low, and then after that trade a little bit lower. I'm not sure how much lower, but eventually to that target. That's what I would be betting on. The different ways of sort of deciding on take profits as well. I just showed you 2 ways: pivot points and ATR. The other one is just to look with the risk reward ratios. Let me see if I can delete this thing. So another one would be if we do short sell here and stop loss goes up here, we're risking 0.5%. If we revisit the low, we make slightly less than our risk. If we look for 2 times the money, then we need to decline quite significantly, which I don't really, 2 times the risk. I don't really think this is gonna be sort of the best strategy, but maybe looking to get out around 122 or so in the next 2 days or so. That will give you 1.35. So we got a question from Ronnie. If Brexit goes pear-shaped, will that raise or lower the stock markets? It depends on which stock markets you're referring to. Uh, the biggest problem if you're talking about the FTSE 100 is that the FTSE 100, a majority of these companies, they don't actually generate their profits from um, from the UK. They're just listed here, and a lot of these are commodity markets, so they make their profits in dollars. So when the pound declines, they make more money, and sorry, when when the pound declines, these guys make more money, which lifts the FTSE 100, and then the other way around. So it's not really. It's a bit difficult, but look at it from this. It sort of really depends. Really, it really depends. You would need to look into the specific shares. I'm quite certain that, for example, in what is it, the FTSE 250, which includes a bunch of smaller, like includes smaller firms. Obviously, I would guess that most of them are focused on the UK economy, but most likely, probably at least half of them have some exposure to Europe. So maybe in these smaller shares, if you don't have Brexit, these companies can continue to work as they did before, and from an economical point of view, it should be good. I think as well for the DAX 30, if we don't have Brexit, that should also be beneficial for the DAX 30, for those companies here that have plants in the UK and exports to the UK. Okay, we're gonna wrap things up, guys. I want to thank you so much for joining me. So we have about 8 people watching right now and 4 likes. So let's see if we can ramp that up. Please help me get this show going. So hit that like button, and I'm logged in looking at my own account here, so I can't subscribe to myself. But you should have a little button here which is subscribe. As well, before I forget, if you're London-based, and even if you're not London-based, but most likely if you are London-based, it's going to interest you more. But we're going to have a free event, a free seminar on May 22nd. So May 22nd at ATFX offices here in central London, just next to Bank Station. We're going to have a free seminar. I think it will start about, I think we said 5:30 or so. Actually 6:30, and ends at 8:30. So check this out. It's gonna be, as the name says here, about 5 simple steps to improve your technical analysis. So it's gonna be technical analysis and trading, a few tips, and also give you guys an opportunity to just meet me and sort of ask questions you always wanted to ask. Free to join. Just need to click here to register. You can search for this on Eventbrite, or you can just go to my Twitter, or I can just send you the link via the chat box. Okay, guys, well, thanks so much for joining. We're gonna wrap things up. I'll see you guys tomorrow, same time at 9:30 a.m. London time. Thank you.